Thank you for your patience, ladies and gentlemen. Let's start with the final session, Islamic finance, what lies ahead. I mentioned the three questions the governor raised this morning. We will get to those. Let me introduce this final panel. His Excellency Dr. Ahmed Abdul Karim Al Khalifi, the Governor of the Saudi Arabian Monetary Authority. Mr. Mazen Saad Al Nahed, Chief Executive Officer, Kuwait Finance House. Mr. Abdul Mohsen bin Abdulaziz Al Fares, Managing Director and Chief Executive Officer, Al Linma Bank, Saudi Arabia. Mr. Abdul Aziz Bar, Acting Chief Executive Officer, International Islamic Liquidity Management Corporation. And on the end, Dr. Mohammed Damak, Senior Director and Global Head of Islamic Finance at Standard and Poor's. Gentlemen, welcome to all of you. Let me, Your Excellency, kick it off with you, if I may, and I'm gonna start with the headline, if you like. How different could this industry look 10 years from now, and what will that depend on, do you think?
First of all, let me thank the Central Bank of Kuwait and particularly the Governor and the IFSB for hosting us today in this excellent arrangement and nice selection of topics and speakers as well, and good combination. And he puts the regulator and the regulated bank here, and it looks like he means something. Exactly. But that's good. I'll talk about the experience in Saudi Arabia, and then probably it's more challenging for me to look forward 10 years later. As we talked about the challenges today, it looks like that we know the challenges, but how to solve these challenges, this is by itself is a challenge. In Saudi Arabia, since the establishment of probably the first Islamic bank, which we don't call them Islamic bank so far, like Bank Al Inma is completely Islamic bank, but they don't call it Al Inma Islamic Bank. By the same token for other banks. Since the establishment of these banks, they have been practicing this, but when they come to the regulator, we keep telling them that we do not differentiate between the conventional and the Islamic bank. Nowadays, we have realized that this has, in fact, I don't want to say stifled the innovation or the products and services of the Islamic banks, but they needed more room to maneuver. And we have realized that recently, and we began to talk to them seriously, and we began a number of arrangements, including workshops and symposiums, in order to talk to them to understand what are their needs. And in fact, as I said, the challenges are the same challenges as we see nowadays, but how we look 10 years from now at the Islamic banking, our strategy in SAMA is we want really to expand the Islamic banking and Islamic service industry in general for a number of reasons, but one of them is because the society wants that. So you need to adapt to their needs. You need to tailor to their needs. So you need to, unless you tailor to that, they will find their place somewhere else. In this age, I mean, it's not the physical, that physical space will, where they will find the service, the banking service. They can do it over the internet. They can do it with the fin technology now is coming. So we'll face some challenges unless our institutions adapt and adopt the new technologies and the new services and adapt to the needs of the society and, of course, overcome these challenges. So what we need really as a central bank and as a regulator is to more enabling to the Islamic service industry. And we know that we have been in conversation with a number of them, and we put it as a strategy. So I would assume that with the expansion of the Islamic service industry, we'll see more in the market. Currently, as we speak, it is more than 50% of the banking assets in Islamic banking assets. And the retail, I would assume, and Abdul Muhsin might correct me, 90% or more is Islamic. The corporate probably 50 to 60%. So it is there, the market is there, and the market is big, so we need really to adapt and tailor to their needs.
Thank you very much indeed. You know, it makes sense actually to jump quickly to Mr. Al-Fares, if you don't mind, Mr. Nahid. On the back of what we've just heard from His Excellency, what do you think do regulatory authorities, the supervisory authorities need to do to give you, to allow you to grow, to allow you to innovate, to allow you to breathe?
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين. This is a very important question, but please allow me also to thank the Central Bank of Kuwait as well, if I speak, for such well done organization, as well for the selection of the theme of this conference. I think this is the second one. Always Kuwait is amazing in arranging such conferences. I will have just short comment related to the first question. I will come back to your question. Islamic finance in 10 years. I think this is a big question. I think, and I am believing, it will be totally different. There will be a lot of challenges. And according to Basel report, which is published October 2017, about just the result of fintech on the banks. They divide it into 5 different types of banks, and one of them is disappearing banks. And I am believing some banks whom will not take initiatives from now, they will disappear in 10 years. And that's coming because of the fintech and digital banking and other things. But back to your question, one of the major challenges in front of Islamic finance, I believe, is the regulator, supervisors, because unfortunately they are implementing the same rules and regulations for both conventional banking as well as Islamic finance. And that cannot be done. And let's think in 10 years, are we going to have 2 different bodies for supervision? Is the Islamic finance need to be supervised also in the same manner of the conventional banking? With all respect to those great people and great effort that been done for the founding Islamic finance 40 years ago, I think they did great jobs. Unfortunately, did start from the conventional background, and this is the problem that we are facing today. As we mentioned this morning, Murabaha is representing big percentage, and Murabaha, in fact, it's reflecting conventional bank products to be Sharia compliant because regulator and supervisor want that way. We understand as Islamic banks, risk is very critical. Definitely the deposits need to be supervised very well by central banks, as well the capital. But we should really think seriously out of the box and go into the real economic things, which is Islamic finance need to be do. And one of, why don't we allow at least small window for Islamic banks to go out of the box, start real businesses. Participation is one of things that we can do. And I believe financial institutions today at large, they are among the best to do feasibility study, to judge the project's credibility and others. Let's utilize this. We could do it through a subsidiary. We could do it through just a small part of, for example, return earning. Let's avoid the deposits. Let's avoid the capital of the bank. Why is this not being allowed by regulator and supervisor? I am believing it's coming. Unfortunately, it's going to take time, but this is the future of Islamic finance. Other point also, as been mentioned this morning, the Islamic finance only represents 2%. And based on some studies, not only 11%, but over the last 5 years, it's growing between 18 and 20%, an average 19%. And that could be because the base is very small. But what will happen in the future? Why didn't we? If we open the doors to Islamic finance, the growth will be definitely is much bigger. And financial inclusion, one of the key. Technology utilization is going to be important for us in Islamic finance. And the innovation in different products is crucial, and definitely that cannot be done without the support of the regulator and supervisor being out of the same rules for conventional banking.
Thank you very much indeed. Mr. Dahad, we heard from the chairman this morning, KFH. A general question to kick us off with the title in mind, what lies ahead. We've talked about a number of the challenges, and indeed one of the biggest challenges is finding solutions now, as we've just heard. What area in your mind is in need of the most urgent care now?
Okay. Bismillah ar-Rahman ar-Rahim. Thank you, Axel, and the panel. What needs urgent care now is, number one, upscaling of our human resources, understanding of the developments that are happening in the market, particularly when it comes to technology and data. I'll give you an example with general data governance. If I was to look at, taking Kuwait Finance House as an example, if I look at the legacy of it and the systems that were built and the type of data that was collected over the years and the fragmentation of this data and the quality of it in the sense that I could use it moving forward, specifically with fintechs or with AI for that matter, to extract value out of it. I find that most of this data is fragmented and it's quite difficult to make sense of it. So as such, one of the biggest challenges that we are facing, along with other Islamic and conventional banks for that matter, is ensuring that their legacy systems and data is moved to the next generation where you have open APIs, you would allow fintechs to actually integrate into your systems to extract such data and to make use of this data and convert it into knowledge. That knowledge conversion will give you a significant edge in terms of understanding your customer, in terms of understanding what they want to achieve, in terms of their wants and needs, and it would give you, as an institution, the ability to actually serve them better. So, number one, we have to ensure that we have clean, viable data that we could use moving forward, specifically with the new fintechs coming in. Our systems have to be open. Our cybersecurity has to be of utmost of the highest standards in order to ensure that our customers' data is stored well.
And we saw there just how much of a threat people think that is. Yeah.
Absolutely, and it still remains one of the highest priorities for banks, whether it be conventional or Islamic for that matter, because data is the most important asset that we hold on behalf of customers, and we're bound by law to ensure that this data is safe. So on one end, in order to ensure that we cope with the development in technology moving forward, is we need to have robust IT systems, intelligent systems, and people who operate them, not operating in the old methodology or in the old mindset of, I will provide you with the support that you require as a business to go ahead. Rather, they should be pushing the business ahead to say, you should be thinking about this angle of the business. Second, and I think it has been repeated by all the previous sessions, is fintech. It's coming, it is actually in place, and we need to ensure that we use the best out of what's available. I personally do not view fintech as a threat per se to institutions such as banks. Banks are regulated entities. When it comes to dealing with money, this is a very, very, very hot topic that I doubt moving forward, given all the regulation that has been coming in, that this will be easier for fintechs to, or for regulators to accept fintechs lower level of, I would say, KYC, making sure that all the information is there and available. And we need to ensure that as banks, we carry on our duty to ensure that the money is going in the right place. Right. There will be no suspicious transactions, God forbid, and what have you. So in order for us to be in line with the new fintechs, we have to operate lean. We have to utilize those technologies in order for our transactional costs to be at the absolute minimum. If we continue to operate in the current model, I don't think that we can survive moving forward.
You know, I just want to follow up, and apologies, gentlemen, I'll come to you in just a second, but I want to follow up on this. And all the things you've mentioned, IT systems, data, the use of data, the clever use of data, fintech, innovation, it's not confined to this sector. These are problems all of banking has an issue with. What is holding you back? What is holding the Islamic banks back? Are you constrained by the things that we've talked about today, or are you constrained by the things that conventional banks are constrained by? For example, cost. For example, changing mindsets, changing mentalities.
We are constrained by the same constraints that are faced by conventional banks. In addition to that, we are also constrained by certain Sharia constraints, because ultimately we are a bank that operates under Sharia principles. Sure. And as such, Dr. Abdul Aziz, I think, articulated it well earlier, that some of the transactions, when moved into the technology platform, lose some of the value in terms of recording the purchase, what did the person being financed, what did he buy, what did he sell, are the timestamps in line, did he actually own the commodity prior to selling it in order to get the cash, what did he actually buy, all of the disclosures associated with it, and compliance with rules and regulations that are evolving as far as those transactions are concerned.
Yeah. All right, thank you. Abdul Aziz, I want to, excuse me, bring you in on this. You, of course, your role is in issuing sukuk, short-term and slightly longer-term sukuk. When you and I spoke yesterday, you mentioned that in Malaysia, when we talk about supply and demand, the supply is very effective demand. That's critical, it seems to me. How do we make sure that is more widespread?
Thank you, Axel. I would like first of all to thank Central Bank of Kuwait and IFSB for the great hospitality and this kind of forum. I think basically more is always better than less. I guess, our role in ILM is to supply this instrument. And if you look at things, the way it started in our position, it was based on a concept because of a dysfunctioning of the Islamic capital market. From that concept, we built this institution, brought people inside the institution, get regulators together, and we have strong engagement with Sharia scholars, market players, rating agencies, and the whole infrastructure. We started with 0, and today we have $3 billion of outstanding of sukuk. And I think besides the only issuances, there was a strong engagement with the Sharia scholars, not only in ILM, but also from the market players in terms of the Islamic banks, to ensure that we can feed a gap and also to listen to the market. And I think we've been able to develop many things beyond the securities that we have developed. It's also to have the ecosystem in place. We have strong primary dealers like KFH, who was there since the beginning, like banks like Abu Dhabi Islamic Bank and the First Bank of Abu Dhabi and other Islamic banks as well. So we've been able, from a concept paper, being able to really develop a market which is very strong in terms of the ecosystem, but basically because we were very engaging with the market players. So I think, yes, I believe that supply can drive demand, but we have to start with something. So like I said, we believe that more is better than less. So we need to be really encouraging, not to look at the challenges, but to the ultimate game of the objective, because this can overweight all the challenges.
Yeah. Mohammed, again, with a view to the title of this session, what lies ahead, how encouraged are you? You've been following this space for a long time. How encouraged are you by what you hear today from our panelists? And what do governments and regulators, supervisors on the one hand, and banks on the other need to do? And who is the onus on more, would you say?
First of all,
about 5 questions there.
Yeah. First of all, I'd like to join my voice to my colleague to thank the Central Bank of Kuwait and the Islamic Financial Services Board for the great event and for the great organization. how much I'm encouraged, I think very much. When I see the quality of the debate, I think people understand what are the challenges faced by the Islamic finance industry today. And there are, at the same time, challenges, but there are also opportunities. And these are two, in my opinion. Number one, standardization. Standardization is a big challenge. I think we're all aware of it. It was discussed today. The difference now is that I sense that people want to do something for standardization. And standardization covers two things. It covers Sharia interpretation, and it covers the legal documentation. Today, it's still more complex to issue sukuk than to issue a conventional bond. And if you are the Minister of Finance of a country that needs money to pay contractors, and you're offered with different solutions, one of them is to do your sukuk in 3 months, and one of them to do your bond in 1 week, you will go to the bond route. So what the market needs is standardization of Sharia interpretation. And I think on the Sharia side, one number that struck me this morning from the presentation of Governor Al-Hashel is that the top 3 Sharia scholars sit on 70 Sharia board. I made a small calculation. 3 Sharia scholars, 1 Sharia scholar on 70 Sharia board. The Sharia board meets 4 times every year, 280 working days. In 2018, there's 251 working days, which means that the Sharia scholars are probably working 29 weekends, which is great. And that without counting the travel time and etc. So I think the market would benefit from standardizing the product on which we all agree and which have been used and reused and reused. We no longer need to look at the ijara sukuk, the wakala sukuk, etc. And that would free the time of Sharia scholars to be able to start to innovate more and come up with the solutions like the muzara, like the istisna, which is a great product that could serve the financing of infrastructure. And that could create some opportunities for growth. Now, on the supervision of the Sharia compliance, I think RegTech, and I'm coming to the fintech space, which is the second opportunity that I see in Islamic finance, RegTech could help to make sure that we remain in compliance and that we avoid what happened with the Tawarruq operation. So you come up with a structure that is agreed upon by the Sharia scholars, you give it to your operational people, and then you put a RegTech or a software that checks and makes sure that all the steps have been respected. So by that, you ensure your Sharia compliance and you ensure that you still have time to do other more important things. On the fintech, very quickly, I think fintech will disrupt some of the business of the banks in this part of the world. One of them is the payment and remittances business. This part of the world sends, expats sends every year around $100 billion back home. And if you're offered the possibility of doing that through a fintech at a lesser cost and a higher speed, that would help. Another avenue for growth through fintech is what Dr. Al-Hashel talked about this morning, is the 70% of SMEs that do not find anyone to finance them. Crowdfunding could be a solution. Mobile banking could bring the 2 billion people that are excluded from the financial system and that are interested in Islamic finance. Everyone has a mobile today, so mobile banking could bring them back to the system.
I've got to say, Abdulaziz, I'll come to you in a second, but you sound quite exasperated when you talk about these things. Is it because the solutions are there and they're just not being acted upon? Or you make it sound simple?
No, the solutions are definitely there, but what is needed, and I think this was one of the answers to one of the questions on screen, is more cooperation with the standard setting bodies. The IFSB is there, the AOEF is there, the IFIM is there. They're all built and came up with great standards, but what we're lacking today is the implementation of these standards. And here the regulators could play a role saying that, okay, we have these standards, these guys agreed upon these standards, let's implement them.
Yeah, okay. Yeah, go ahead, Abdullah.
Yeah, I mean, I just have a slight different views than Mohammed Damak, otherwise it won't be very interesting, right? When he mentioned about the time that the Sharia scholars spend on 29 hours a day to work, I think that they're very efficient, which means that we spend less time today on Sharia structure because they become very standard type of structure. So which is the good news about the industry, which means that because of more of awareness, we have really lifted the barrier of psychological entry, because you can see from this morning that the UK has issued a sukuk, Hong Kong has issued a sukuk, so many multilaterals and many sovereign has issued sukuk of the past years, so which means that we are much more efficient. Of course, we understand that it might take much more time than a conventional bond, but from where we started until today, we have compressed the time to issue sukuk. So I think in the future it's going to be much more easy to issue sukuk because countries will think about earmarking some asset already before going to the market. So this is how I guess the market is going to evolve.
Okay, thank you. Your Excellency, when you hear Standard & Poor's say what they've just said in terms of solutions, in terms of possible avenues, I mean, what do you feel? What is your response?
Well, I think it's not, of course, the regulator by itself, but we need really collaboration from all parties. The regulators, the same thing for financial institutions and for scholars. I agree. The scholars, by the way, is, as it was mentioned, I mean, the number of hours they are working, marvelous. But we see also another challenge that not only the shortage of scholars who understand both the Sharia and the finance part, but also you find differences in opinions, and you find probably even in some within the country like my own, you find, I mean, a committee of scholars, they are approving a product while the other is not. So the differences of opinions also is a challenge. So all these challenges, they need really collaboration from all parties. They are not easy, as you just mentioned. I mean, you can lay out all these challenges. We have been hearing these challenges since the beginning by Governor Al-Hashel. That was well thought of and a very good presentation. I told him at the end of the presentation that we should leave. There is no need for that. You summed it up. So all these challenges, I mean, easy to say and easy to track and easy to find, but the problem is how to solve them really is a challenge.
Yeah.
But we need to get together. I was thinking of that we need even the scholars. You need the scholars by themselves to get together, and it is the problems that we have lots of scholars, Sharia scholars, but how to train them to be also good in finance and economics so they can absorb and understand these products and the mechanics and the business of the industry.
You know, if I could be so bold, you know, 3 years ago here, I think we talked about aspiration. That was in the title. Today we talk about a value proposition. You know, maybe 3 years we'll come on to solution. You talk about collaboration and that this needs to happen. Are you optimistic that that's the sort of collaboration that is required is beginning to fizz?
Well, at least we see bodies, they can do that. The Islamic Development Bank is one, the IFSP is another, the IOFI is another. But really we need also to encourage those. Like the IFSP, if you talk to them, the members are not really as active as they are supposed to be. And here comes a problem. I mean, with all the members that they have, but still we need to be more energetic in order really to collaborate. But as I told you that we have all identified the same challenges, but we need to solve them. Yeah. Without collaboration, we cannot. Have we started? I don't think we have started, I mean, as strongly as we really, or as the situation requires.
You know, we mentioned the IFSB and the efforts or the work that's been done on market disclosure, on transparency. Again, if I may be so bold, I guess that's one of my roles here today. Why has this not happened sooner? Anyone? Mohammed, I'm sure you got a response. Should we be surprised that it's not happened sooner?
That's a good question. No, I think over the last 40 years, we've all been discovering the Islamic finance. This is a young industry, and it started less than 50 years ago. So over the last 40 years, we've gone through the learning curve, and as you go along, you learn how things are done in the conventional space, and you try to adapt that to your industry. Because at the end of the day, something important that we need to keep in mind is that some clients want the Islamic product to have the exact same characteristics of the conventional product. They don't want to take the asset risk. They don't want to lose money. Some of the depositors in profit-sharing investment accounts, they don't want to lose money. And as a bank, you cannot make them lose money. Otherwise, they would decide to leave. This is why one of the approach that was used in Malaysia, for example, authorizing both the Murabaha-based profit-sharing investment account and the Mudaraba-based profit-sharing investment account has helped. And it will help further as the world is naturally moving toward loss sharing with the recovery and resolution regime. So I think in the development of Islamic finance, in order to help the industry to grow stronger in the future, we need to have both type of products. We need to have products where we need to have sukuk with full contractual obligations. We need to have murabaha, profit-sharing investment accounts. We need to have the ijara, the murabaha. And we also need to develop the istisna. We need to develop the musharaka and the mudarabas.
And from the bank's perspective, as the IFSB lays out these guidelines or the work that it's doing, how do you react to that? How prepared are you to provide that disclosure that of course comes at a cost, et cetera, et cetera? Let's hear your perspective.
No, I slightly differ from Dr. Mohammed in his assessment as far as customers not wanting to participate in the risk and reward of a transaction. Yes, there are certain customers who do not want to enter into the risk, and we should be extremely transparent as far as banks providing the service, saying and clearly articulating that those products carry with them the associated risk of making money or losing money. And it is part and parcel of the principles of Islamic Sharia. If they decide to go into this product, then it should be treated as such. And the customer should accept the fact that as much as money he would be making from this participation, he might lose some money. So as such, there should be products that are pretty much safeguarding the interests of the customers, i.e. current accounts, where we're not allowed to invest those monies on behalf of our clients, and this is a safekeeping account. But for customers who would like to benefit from the profit and share loss accounts, we should treat them as same. And I cannot compare them to a conventional bank with all due respect. And I think this is the market difference between Islamic and conventional banks, and how rating agencies, regulators, view Islamic banks as equivalent to conventional banks. Now, what we need to do is we need to ensure that we have clear, transparent campaigns articulating the risks ahead of the benefits of those products, making sure the customer understands it, and after that is achieved, they would participate with the profit and loss. And the treatment of this product should be treated in line with the structure, i.e. I cannot compare it with a regular deposit, nor can I compare the investment as a loan with a capital charge and what have you.
I'll come to you in a second, Mohammed. Mr. Al-Tharis, I'd be interested to get your viewpoint in this as well, from the corporate perspective in Saudi.
First of all, if we look at Islamic finance, Islamic Bank today, and from disclosure point of view, I think they are doing great things. We are implementing international accounting standards. If you look at our financial report, you will have huge information being disclosed, very transparent, and I would say it is in the level, if it's not even much better than the conventional banking. So there is no issue in transparency and disclosure. Now, related to what are the main challenges in front of us to not bear the risk in giving the money? It is, again, rules and regulations. If you will allow the Islamic finance to go into the musharaka, That means this is the risk you will bear, and you will bear the responsibility as a result of that one. So again, we are trying to avoid as much as possible the risk, because we would like also to be within the guidelines of conventional banking supervision and rules and regulations imposed by central banks. I am believing, in fact, those countries whom will lead in the future, especially you are speaking about 10 years, I think one of the elements, those whom will separate the supervision under the central bank, the same, two different departments, one supervising the conventional bank and the other supervising the Islamic finance, and let the competition go. Yani, also, I highly recommend, in fact, for those who want to lead, and we are hearing, unfortunately, some outside the Islamic world want to lead in the Islamic finance, we have to have our legal unified framework for Islamic finance, i.e. regulators with Sharia scholars, with also banks doing the business, get together and create that, and let's speak about the risk. And reduce or eliminate the risk, yani instead of speaking generally, okay, we don't want to take that risk. Last point, since you mentioned the sukuk, in fact, we've been participating heavily over the last 7 years in restructuring sukuk. And we did co-lead managers, leading managers, underwriting, and participation, even investing our money. Today, our portfolio on sukuk is about 12 billion Saudi riyal. Yani that means around 4 billion US dollar or so. Unfortunately, we are seeing the same on sukuk structuring, the same done in products. Yani we are doing, most of sukuk being issued is murabaha sukuk. And murabaha sukuk, you put mudaraba, a small part of it, to make it tradable. And as you know, murabaha sukuk, you cannot trade it. So there are 3 main conditions for any successful sukuks, which is should be tradable. I also recommend highly should be not backed by assets, and should be floated also to reduce the interest rate risk. If we have those 3 factors, we can have successful issuance of sukuk. And that could be done easily through Islamic products, through mudaraba. We have full structure about that sukuk, provide all these conditions. So to close my points, I think underutilized heavily in our region, which is the capital market as a funding of, as a source of funding. Unfortunately, most of corporates relying on banks only. I believe we have big opportunity also to go to capital market, utilize it as a source of funding, not only banks.
Okay, thank you very much. Very quickly, Mohammed, and then Abdulaziz, come to you.
I think I agree with all what has been said, but another angle to look at it is from the cost of funding perspective. If you take a corporate and offer them a solution to do an ijara sukuk or murabaha sukuk, which will cost 5%, and the solution where they will do musharaka sukuk, which will cost them 15%. In your view, a rational corporate would decide to go which route? Of course, the murabaha, because it costs them less to do compared with the musharaka sukuk. Some of them will accept to go through the musharaka because they would look for the Sharia compliant aspect of the transaction above all, irrespective of the cost. But on average, maybe 80, 75% of the clients will go the musharaka.
Okay, very quickly come back on that. Yeah. I will come to you. Okay. Go ahead.
Just to reduce the risk, not musharaka only for sukuk, for capital market or for other corporate to issue, we did a very comprehensive structuring about mudaraba. Sukuk al-mudaraba, I think it has a big potential, i.e. we can reduce the risk tremendously. You can come, let's say Al-Inma Bank, for example, and already we launched this type of products, not through mudaraba, not through sukuk, but through other type of products, and believe me, it's been traded by more than hundreds of billions of riyals, and more than 55 international financial institutions are dealing with that. We avoided the commodity 100% in that, which is, we call it nama products, and this is to take deposits and invest it as a mudaraba accounts in our top line. To reduce the risk, we agreed this is only mudaraba in the revenue side, not expenses side. So if you see the revenue of financial institutions, excluding the expenses, you will find the risk is very low. And then you can set the cost of that type of fund up to limit, and the additional return on that mudaraba could be incentives to the lead managers. That's been approved by Sharia and been done. Unfortunately, when we try to implement it in Sukuk, you know, some type of risk. So I agree, cost of fund should be well monitored, and I believe there are big rooms to have reduced it. Yani we did it really. I will mention one client, which is, for example, Total, we have set up joint venture between Aramco and Total. And about 5 years or 6 years ago, Aramco led issuing Sukuk as we're raising, financing. And because of the restructure of Sukuk takes some time, they came to us and they said, sorry, we have oversubscribed by financing, even through us. Our partner saying, why should we go for Sukuk? It's $1 billion. We told them clearly, if it's not less costly than the finance, then you are right. So they stayed with us about 4 months and turned lower by more than 20 basis points. So the Sukuk will be lower than direct funding from banks.
Okay, all right, thank you. Yes, go ahead.
Yeah, thank you. I mean, I've been listening with lots of interest of what was said, and just to answer to some questions, this is specifically what the ILM has been able to address, which is the tradability of the Sukuk, where our Sukuk form is the Wakala structure backed by 51% of tangible assets and receivables. We've been able to come with this design because we engage with the Sharia scholars to see what is the most acceptable structure in the Islamic world. So that's why we came with a solution that is tradable by all the Sharia scholars, which is acceptable, which is highly rated, which is also a floating rate as well, and also in terms of cost of funding, that, like you mentioned, all our primary dealers have different cost of funding, but they all participate in our Sukuk issuances with a single price. So I think we've been able to address the deficiency of the Islamic finance capital market because of strong engagement by the regulators, market players, Sharia scholars, and we spend some time to ensure that we can develop that type of instrument. We issue in different tenors because I believe that different instruments are here to fit different needs. We can't compare Musharaka and Mudaraba. There are two different structures that are addressing specific needs.
Okay, thank you. I sense lots of conversations happening after these panels. I've got another wary eye on the time here. I don't know where it's going today. Right, let's take a quick. I've got a few more bits and pieces that I'd like to ask you, but let's take a quick look at the what the audience thought on that question, and that might again inform a little bit of this. There you go. It's pretty conclusive. Sharia-based product innovation comes in on top at 40%. Adoption of fintech, 29%. Is it a little bit surprising greater issuance of high-quality liquid assets is only at 7%? Is that a little bit surprising to anybody? Should it be? No?
We don't see it.
No, it's definitely a challenge, but you can come around this challenge. So yes, there is a lack of high-quality liquid assets, but the ILM has been active in issuing the assets. Some of the government in the GCC have been active issuing Sukuk last year, and this is why we saw the fantastic performance of the market, plus 40%. Plus 40% last year.
But Sharia-based product innovation at 40%. Clearly, I guess that's no great surprise there. Let me ask you this question, and I'll throw this out there. And I go back to the questions asked by the governor again this morning, and the targets and 2%, and how do we get that up after 4 decades? Does the industry need, do you think, more well-defined targets and timelines to rally around? Is that something that would help, or is that a little bit too vague and generic?
Well, I don't think we need to put targets because I know that the seeds for the growth and the potentials are there in the Islamic world and in the non-Islamic world. There is great demand, by the way, for the Islamic products, but all we need really to be more innovative. And that's why we need to collaborate between the regulators and the financial institutions. Financial institutions, they need really to be innovative. They are probably constrained by some of the scholars or by some of the regulators from our side. You probably heard one of the panelists saying that you cannot get more engineers, and that's what we think about. When I talk to my regulators, they say that if you get into istisna, istizra, etc., at the end of the day, you will have those type of people as part of your team, which is outside of my domain.
Right.
And that's why probably Abdul Muhsin is asking to have two types of people, regulators for the Islamic industry and regulators for the conventional, which sounds good.
But not that realistic, right?
I don't know. I cannot really comment on that at this stage.
Okay, yeah, go ahead.
I mean, I think in terms of innovation, I mean, what I think might be interesting to look at, we saw that some emerging market countries have issued sukuk from the sovereign side. I think maybe in the future we might see some new structures whereby we have GDP-linked sukuk, because this type of product can tick all the boxes because that has some impact in the country. We have this scheme of profit loss sharing between the issuer and the investors, and it's linked to GDP growth in emerging market countries. And that also gives some kind of motivation to the country when times of downturn, not to try to use the tax regulation because it's quite punitive. And this is where we can try to strike the balance between the spirit of Islamic finance and also real economy going forward.
Mr. Faris.
I think, we don't want to have a targets per se, but we have to have a roadmap. I think Islamic finance has big potential to grow. And if we go to the principles, as His Excellency, the Governor of Central Bank of Bahrain, Rashid al-Ma'raj mentioned, let's go back to the maqasid al-Sharia and then try to reform the Islamic finance, and you will see the potential growth that's coming. As well, we have to look at all, challenging aspects that we are having today, and then do workshops, try to solve it, especially if we are looking for mid-term and long-term. Without that, having this roadmap, Islamic finance will continue, but not as such that we are looking for.
Mr. Nader.
I personally believe, and I take it from His Excellency Dr. Al-Hashil, where he said it about 2 years ago. In order for the Islamic finance industry to leap forward, we need to switch from Islamic-based products to an Islamic-based economy. And as such, in order for the industry to significantly advance, I think we should move from a legislative point of view, from a regulatory point of view, and from banks' own inclination towards Islamic finance, is to have a full-fledged Islamic-based economies rather than only Islamic institutions operating under or offering products that are under Islamic Sharia.
And as we heard from your chairman this morning, the whole, you talk about an economy, but the whole ecosystem
Absolutely.
is critical here. All right, look, we've got a couple of minutes. Thank you for your questions coming in, and I think we've managed to get to some of these. I'm going to just throw really the title at you for a final comment from each of you, if I may. And one of the questions here, I think, you tell me what you think, but moving forward, do we think, will Islamic banking eventually replace conventional banking, or can they work alongside each other? Comes a question from our audience. So the question, with that in mind as well, but the question is, what lies ahead? What is a title of this event going to be 3-5 years down the road? Let me throw that question to each of you for your final thoughts.
Of course, I don't think it will replace, but it will gain momentum.
Yeah.
Ahead, 3 to 4 years, I think we will be having more conferences and more meetings of discussing such issues, but they will be more in details. So I'm hoping to see that really, and to see a bigger role for us as regulators and financial institutions, market players, and also the standard setters together. Again, collaboration is very important, but I can see potential, and I'm optimistic that it will go forward. What we do as regulators, we are enablers, and we should do more and more as well.
Okay, thank you. Mr. Al-Nahid.
I don't believe that Islamic finance or Islamic institutions would replace conventional banks. I think Dr. Al-Hashil clearly stated it, with the charts, even with significant growth outpacing conventional banks' growth, within the next 50 years, we would only hit 10% of the conventional bank or the, banking system size. So we will work in complement with the conventional banking system, offer inclusion for customers who only want Islamic banking, and I think this is extremely important. And with the right legislative and regulatory changes to recognize certain Islamic products, I believe that those products would, gain traction in terms of their use and their cost base in relative to conventional banking products.
Okay, thank you. And back to the point, why only 2% after 4 decades? Let me throw that in there as well. Are we at least addressing why only 2% after 4 decades? Go ahead, Mr. Rafael.
If you compare 40 years with more than 100 years, that maybe tells you the answer. And also before the 40 years, there was Islamic finance as such modern, And I believe what's been achieved over the last 4 decades is big, yet there is a big potential. Back to your first question, I think conventional bank as well Islamic bank could work side to side, and we are doing, for example, club deals and such, but yet we have to define the roles of each one. I think the biggest or one of the biggest threat to Islamic finance is losing the trust. And we are seeing now Islamic windows and others, which is providing what they call Islamic products, which are not Sharia compliant. And this is a big threat to Islamic finance, and the regulator should play a big role here. We are looking for, UAE experience in having centralized Sharia board to govern that one. We have products, some scholars saying this is not halal, and some scholars saying halal. This is a big issue for Islamic finance. And if I am providing both, that means from my point of view, it doesn't matter. So I agree, we need both, but that needs to be done in well-regulated manner.
Abdulaziz.
Yeah, thank you. I think the objective of Islamic finance is not to overtake on conventional finance, but just to live side by side where people can see the value proposition by means of Islamic finance. And we need to help Islamic finance to grow with a very safe regulatory framework and also a clear engagement and understanding about the nature of Islamic finance. And going forward, maybe to move forward, maybe Islamic finance needs to embrace different type of asset classes which have the same substance, maybe not the same form that Islamic finance, maybe to make it a bit much broader to ensure that we can grow in sustainable manners.
Okay, and finally, Mohammed.
I think 2% after 40 years is not bad. It's 2%, it used to be 0 40 years ago. Replace or work together, I think the client will decide at the end of the day whether they want Islamic or conventional, but the most probable scenario is that they will continue to work together. Does the industry need target? The answer for me is yes. We've identified the challenge. The industry needs a target to say, for this challenge, we're going to bring this solution in X number of years. Yeah. And that would determine the long-term growth. Short-term growth, the industry is still concentrated in emerging markets and oil exporting countries. Some of them are delivering much lower economic performance compared with 5 years ago. So for us, short-term growth is probably within the single-digit figure. Medium-term growth would depend on whether or not we achieve the targets that we have set for ourselves.
Okay, Mohammed. Thank you very much indeed. That hour went very, very fast. I think we could have gone on for at least another hour, and it's testament to the compelling nature of the subject, of course, and to the panelists themselves. So, gentlemen, thank you very much indeed to all of you, and thank you for your questions. Do stay in your seats. I've got a couple of extra bits and pieces to say just on the back of this, but once again, thank you very much indeed.
Thank you. Thank you.